Another disappointment for nio. So is Li Bin feeling awkward this time? Once again, he's come back on his word. At the end of the 2022, new CEO boldly claimed that the company would be profitable in the fourth quarter in 2023 and hanged it at a break-even point in this year. Fast forward to the June 2023, Li Bin had to dial back those overly optimistic predictions, pushing the break-even timeline back by a year. Now he's at it again, announcing that nio won't see profits until 2026. The big question remains, do nio supporters still believe him? Regardless of what folks think, we need to grasp a critical aspect of nio's financial situation: the countdown logic. According to the latest quarterly reports, nio is still bleeding money, my friend, with the losses around 5 billion yuan each quarter. That's a whopping total of 15 billion yuan over the first 3 quarters. As of the third quarter 2024, nio's net assets stand at 16.1 billion yuan. At this rate of loss, 5 billion per quarter, by mid-2025, the company's book value will hit 0. It's a straightforward financial reality, nothing fancy about it. But does a 0 book value mean the end of the nio? What's the road ahead for the company? Hi, my friend, I'm Sheila Wang. I'm here to update it on the most cutting-edge and fresh business and investment information for you. So don't forget to smash the like button and subscribe my channel. I also welcome you to join the discussion in the comment section below. And if you're interested in a more in-depth investing report, make sure to check out my analysis report. Now, let's dive into today's topic together. Alright folks, let's break down nio's situation, because it's a wild ride. Their net assets are sitting at 0 doesn't mean that they're about to go belly up. Now let's talk about the cash. As of the third quarter 2024, nio has about 40 billion yuan in cash and cash equivalents. This is the lifeblood of their operations, and the real money they can use to keep the lights on. Even if they burn through that 40 billion, if someone's willing to lend them more, they could still hang in there. At their current loss rate, that cash could keep them afloat for another 2 years, provided there's no new funding coming. Now, let's throw in some hypothetical math for fun. In their latest quarterly report, nio raked in around 17 billion yuan in revenue. So even if nio doubles their sales, and let's be real, that's a pretty optimistic scenario without cracking up their marketing and R&D costs, they still be looking at a loss of about 1 billion yuan per quarter. There's some serious wishful thinking. Let's keep it realistic. What if nio's new model, the Envo, hits the market and they sell 20,000 units per month at an average price of 250,000 yuan? That would boost their quarterly revenue by 15 billion yuan and gross profit to about 3.7 billion yuan. But guess what? They still be losing 1.3 billion yuan each quarter. But with Envo on the way, we might soon see nio sales start to dip. Recently, their weekly deliveries have dropped to just 3,000 or 4,000, less than 16,000 a month. So, if they somehow maintain the third quarter's peak delivery levels while also adding the Envo's 20,000 units a month, they still be facing a loss of 1.3 billion yuan per quarter. Surprised, right? You should be. Looking ahead, I'd estimate the nio's losses for the fourth quarter will definitely exceed 5 billion yuan. While my headline might scream countdown to disaster, it's really about urgency. Will they go bust? I doubt it. nio's brand value and assets like their battery swapping station still hold some worth. I recognize that. Their fate is pretty much tied to how they perform next year. If Envo can sell over 20,000 units monthly, they might just manage to scrape by with only slight losses, provided they can secure around 15 billion yuan in new funding. That cash is a must. Otherwise, they're in hot water. So what's the bottom line? If Li Bin wants to keep NIO alive and kicking, they need to hit two targets. The first one is Onvo's monthly sales must reach at least 20,000 units. And the second, they need to nail down that 15 billion yuan in financing. If either of those falls through, the outcome could be pretty grim. Now you might be thinking, how can NIO keep losing money and still show such confidence? Well, here's the kicker. They're not playing it safe at all. In the third quarter, the R&D spending skyrocketed to 3.32 billion yuan, way outpacing competitors like Li Auto and Xiaopeng. Plus, with new products, stores, and their battery swapping expansion, it's hard to say their spending slowing down anytime soon. As for their assets, by the end of the third quarter, NIO had 42.2 billion yuan in cash revenues. But they also have over 30 billion yuan in payable and about 20 billion yuan in loans. Overall, their cash flow is still pretty tight. Even with a long history of losses and burning through hundreds of billions, NIO's staying power comes from a strong blood-making ability. Just recently, they announced a 3.3 billion yuan capital injection through state-owned investors. While they won't cover a quarter's losses, it's a sign that state support could boost their future financing prospects. Plus, last December, they soared a massive $2.2 billion investment from a Middle East firm. We have mentioned that before. If you want to know more, you can check my former video.
So this is an era that cash is the king. And we find that NIO's confidence comes from a steady stream of cash flow. For us ordinary investors, I think it's very crucial to manage cash flow well. So here, I'd like to recommend you a very good application, MooMoo. MooMoo provides an incredible welcome bonus for the newcomers, of course available for a limited time only. With an exceptional offer, you can unlock the key to supercharge earnings on your uninvested cash. Enroll and activate today to secure an unbillable 4.35% annual percentage yield, plus an additional 3.35% base rate for the next 3 months. That's amount to 8.1 annual percentage yield, more than double the national average. Just think about it, it's free money in your pocket. So ready to put it to work for you?
Whether they stick to their all-electric strategy or leverage their unique battery swapping model, NIO's journey is going to be a marathon, not a sprint. The capital markets have shown some love for their business model, giving them the confidence to keep pushing forward. So I think that's the deep confidence from Li Bin and NIO. So there you have it. NIO's navigating some choppy water, but they might just have what it takes to keep sailing. My friend, maybe you want to know what's the NIO's game plan moving forward. Spoilers alert, going downward seems to be the only option. Since the start of this year, BYD kicked things off with their all-electric parity, Qing Plus. Price at just 79,800 yuan. This set the tone for 2023, where most car manufacturers need to think about the slashing prices if they want to see success. As for NIO, they're also pushing their own downward strategy this year. The Onvo has started deliveries, but they're still ramping up production, so its true potential is still a bit of mystery. Plus, they're set to unveil their new brand, Firefly, at the NIO Day 2024, with the first product expected to be a compact car priced around 100,000 yuan. Li Bin even hinted during the second quarter earnings call that Firefly will share sales channels with NIO, meaning lower initial costs and a quicker rollout. In addition to the Onvo L60, 2025 will see the launch of a flagship 6 or 7-seat SUV and a larger 5-seat SUV, with Firefly debuting next month. If the other 3 new models don't get delayed too much, we could see monthly sales of 5,000 and 10,000 per vehicle. Coupled with NIO's existing sales, this could help them hit the ambitious sales targets. So for investors, new investors, the best move is to support this vision with cautious optimism. Remember, no matter how much you love the brand, don't go all in.